Alright, so today the SPY made a new all-time high while breaking through an important resistance zone. This is fantastic, and this only reinforces the uptrend while rejecting any possibility of a bearish reversal signal. However, although the market is insanely bullish, many stocks are still far from their all-time highs, including the QQQ ETF itself, which is still struggling to break its own resistance levels. So in today's video, we're gonna analyze our stocks, we're gonna study the market together. Everything described here is based on technical analysis, price action, and statistics. All right, every single one of our strategies are not based on guesswork, assumptions, or gut feelings. This video is an unbiased analysis of the market. I hope you guys are gonna enjoy it. Welcome to the Finance Hydra channel. My name is Nathan. It's a pleasure to see you guys over here. And yes, as we can see here, the SPY is materializing another very good, very solid bullish reaction, breaking the previous resistance level, which is the previous all-time high, $574.71. This key point over here is another pivot point because we are in a bull trend. When bull trends are made of higher highs, higher lows, all right? Eventually, we see new lows. However, as long as these lows occur above our support levels, fantastic. The bullish bias will persist. And right now, we are making a new high, breaking the previous high, breaking the previous resistance level, materializing another bullish pivot point, suggesting more upside for the SPY. Do we see any bearish reaction that could frustrate this bullish sentiment? No, not right now. We only see an incredible bullish candlestick pattern over here above the 574. There's not a single top signal here yet. Oh, but Nathan, what if we see a top signal tomorrow, right? Or in the next few days? Then, all right, we could see a pullback to the 21-day EMA, the exponential moving average on the daily chart. But as long as we stay above the support level, the bullish bias will just persist. Any pullback in a bull trend is nothing more, nothing less than another buying opportunity because you are buying near a support level with a good risk-reward ratio. The QQQ, however, this is not true for the QQQ. Our tech stocks are facing a very problematic and quite dangerous resistance level, $493 area. This key point is the previous gap resistance level over here, the gap from July 17 this year, which did act as a resistance level on September. And right now, we are facing this key point again. The QQQ has to break this resistance level as soon as possible in order to continue the bullish sentiment, in order to materialize another bullish pivot point. The QQQ is in a bull trend, all right? We see higher highs, higher lows. The previous low occurred right above the support area made by the 21-day EMA, made by the $476 down here. However, we gotta break the 493 again in order to trigger another bullish pivot point, in order to make a new high. Then and only then we may see the QQQ retesting the all-time high again, all right, near the $500. However, as long as we stay below this key point, we should be extremely careful, all right, because it is a relatively dangerous resistance level for the QQQ. If we see any top signal below this area, we could see a sharper correction materializing in the next few days or maybe even in the next few weeks. So right now, the most important support level for the QQQ is $493.15. We gotta break and close above this key point in order to materialize another bullish pivot point, in order to trigger another bullish continuation chart structure to the all-time high, to the $500 area. All right, it is a very simple situation. Meanwhile, we see the QQQ. I'm so sorry, Nvidia is making a bearish reaction today, all right? We are dropping minus 0.20% right now, but this is not much but it is still a bearish candlestick pattern. What's more, this bearish reaction occurred below the 136 resistance level, which is our next technical target. Now, this is not necessarily a problem, okay? This is not a very dangerous reaction because, as far as I know, as long as we stay above the 130, the $130 over here, the bullish bias will persist. Nvidia will remain insanely bullish. But if we lose and close below the 130 over here, then okay, we may see a sharper correction ahead, possibly to the 21-day EMA over here. But so far, apparently, the situation is still under control. What's more, we are still very bullish on the 1-hour chart. We still see higher highs, higher lows. We are trading above the 21-hour EMA. We are still above our support level. So apparently, we are still bullish despite today's reaction, all right? Which is not that strong, but still could be annoying. It could be a top signal, but the 130 is still our most important support level, which was our previous resistance level over here multiple times. 1, 2, 3, 4, 5, 6 times in the past. So this key point over here is now our major support level. Only if Nvidia closes below this key point, I see a sharper correction materializing. And then, Nathan, what are you gonna do? Will you panic about this? Of course not, because Nvidia is still bullish. We are still making higher highs, higher lows. Any pullback to the 21-day EMA could be just another buying opportunity, period. All right? This is why, guys, this is why we should always work with strategy, always try to buy near support levels and try to sell near resistance levels. And what's the most important thing of all? Work with a crystal clear strategy that gives you a clear advantage, a clear edge in this market. Because, guys, the technique is not the most important thing. The most important thing is risk management. Trust me, it is risk management. Not even accuracy is that important anymore, because it doesn't matter. Even if you are right about 80% of the time, if you lose a lot of money in the 20% of the time that you actually lose money, these losses could wipe out all your gains, all right? So it is not about technique. It is not about being right all the time, but it's the context that you are trading. It is your overall strategy, all right? You gotta use a very good strategy in synchrony with a good risk management strategy, all right? Let me tell you a very, very quick story about myself over here, because a few years ago, when I was mentoring individual clients, one of my clients connected me with a person from the venture capital industry. She is the VP of a venture capital firm, and which invests in companies before they even go public, all right? And then they sell their shares after the IPO, after they go public. And they have invested in several companies such as Palantir, Bilibili, JFrog, etc. Companies you guys know. And I worked with them for a while, helping them exit their positions with the best possible timing, all right? Using technique, using strategy. And it was at that time that I got a good insight of the industry, you know, because I asked this client of mine about the statistics of their investments, because I was simply curious, all right, of how often they made money, how much they lose, all right? So I simply asked a few questions, and then she told me that out of 3 companies they invest, they lose money on 2 of them. Only 1 actually make money. And when they lose money, they lose absolutely everything, all right? Everything. But, however, on the other hand, when they make money, the only company that makes money, that allows them to sell their shares after it goes public, this only company multiplies their capital by 5 times at least, all right? This is a clear example of how you should behave in this market as well, because you are not gonna be right all the time, 100% of the time. This is not going to happen, right? Imagine yourself, us working in this venture capital firm, knowing that the great majority of your investments are going to fail. You will lose everything. However, you have the discipline to maintain, to focus on your strategy, knowing that when you make money, you are going to multiply your capital by a few times. And the long-term speaking, this is all that matters in the end, all right? And let's compare this to me, or to us in this case, right? Because my personal statistics, the statistics of the 5% project is on our website, all right? Link in the video's description, the 5% project, which, by the way, you can join. You can test our service for free for 7 days and see for yourself how we work in this market, how to trade professionally using a very good and solid strategy, all right? From a statistical point of view, after 300 trades in the first semester of 2024, we are right 67% of the time, all right? 67, it is not that much. So let's say a round number, 7, all right? Out of 10 trades we take, we're gonna make money in 7, and at the other 3, we're gonna lose money. All right, very simple. But that's not important, because what's important is that our overall risk-reward ratio, which is for every single dollar we lose, we make on average $2.90, all right? 2.09. This is our overall return in the first semester of 2024, all right? So from a statistical point of view, you gotta have a solid strategy so you can survive in this market in the long term. So you gotta work professionally. If you have no idea of how to do that, again, join the 5% project, link in the video's description. So this is the most important thing of all, right? We should work with a clear strategy. And it is interesting because people often ask me if I don't do individual mentoring. And honestly, I'm starting to think about it because it's been many years since I opened a new class, all right? And I'm starting to miss it. It is not a scalable thing, all right? So I would only take very, very few people to mentor. But yes, I'm starting to think about it to make a very good mentorship program. But I'm not gonna promise anything, all right? I'm just thinking about it. But I know that many people need help in this market. It is not that easy, all right? We should always have discipline. We should always have strategy. It is absolutely difficult, especially in times like this. Here, for instance, Tesla. Tesla is right now around a very important support level, okay? Crystal clear support level made by the 21-day EMA, made by this purple trend line over here, which connects the previous bottom levels since August this year. Now, apparently, we are trying to lose this key point, frustrating the bullish bias. If we actually succeed in doing so, we're gonna possibly trigger a sharper correction on the weekly chart, meaning this reaction was another top signal below the 265 resistance level, which is a very important resistance level over here from December last year, almost 1 year ago. So by seeing a top signal below this key point, Tesla is giving us a very, very bad signal, suggesting that yes, we could correct to lower levels, possibly to the 21-week EMA. It is going to report earnings in 14 days, so the volatility will certainly increase. However, by losing this double support level over here, Tesla is showing a lot of weakness, all right? So we should be extremely careful about that. Nathan, what if we see a miraculous reaction tomorrow or in the next few days over here, recovering, trading above this double support level again? Then okay, maybe we're gonna see a bottom signal suggesting another recovery to the 265. However, we don't see any technical evidence supporting this scenario yet, all right? We are just stabilizing around the support level, period, all right? So we should just pay extra attention on this area because this is a critical inflection point. By losing this support level, we are gonna trigger a sharper correction. By making a bottom signal, we could recover to the 265. So It is a very delicate inflection point, and of course, I'm gonna keep you guys updated in this channel every single day, unbiased analysis, focusing on technical analysis, price action, statistics. So subscribe to the Finance Hydra channel for more content like this, and of course, click the like button to support me as well. Your support is highly appreciated, my friend. Thank you very much. Now, these stocks are doing very well, all right, except for Tesla, which is in a critical inflection point. We see AMD about to close our gap at 174. Remember, gaps work as magnets for the price when the trend reverses. Right now, this key point is a technical target, is still a technical target. However, we are trying to materialize a top signal below this resistance level. What's more, this reaction seems to be so far a possible, not triggered yet, bearish engulfing candlestick pattern, all right? So this reaction over here could be a top signal if triggered. Nathan, what if we actually trigger a pullback over here? A pullback to the 162 to the 21-day EMA could be totally acceptable and even desirable because it could offer us another buying opportunity. If we lose, and only if we lose this double support area over here, we are gonna trigger a sharper correction, all right? AMD is going to actually reverse its bullish bias over here, but so far, so good. And Palantir, right? Palantir is a very good one. It is exploding more than 4% today. It is heading towards our next technical target, $45, which is the all-time high from January 2021. Now, there is absolutely nothing, absolutely not a single top signal, not a single bearish reaction suggesting that Palantir is going to correct. It is going to make a correction. It is going to make a pullback ahead, unlike AMD, which we see a bearish reaction below this resistance level, unlike Nvidia, which is also making a bearish reaction below the 136 resistance level. Palantir is insanely bullish. There is not a single bearish reaction yet. Nathan, what kind of reaction could convince you that Palantir is going to trigger a pullback in the next few days or in the next few weeks? Guys, I describe every single top signal, the most important possible top signals in our ebook, which is totally free to download on our Telegram channel. Again, take a look at our website, link in this video's description. Every single top signal is right there. The most important ones is right. They're all right there, all right? So far, there is no technical evidence suggesting a pullback, so Palantir is supposed to retest the all-time high in the next few days in the lack of a bearish reaction. The situation looks very simple over here, but the most important thing of all is that the QQQ should break this resistance level as soon as possible in order to continue the bullish sentiment over here to the all-time high. And then we may see Palantir, then we may see Nvidia, AMD retesting new highs, all right? So far, okay, the situation seems to be under control, but we should be aware of this resistance level, all right? I'm gonna keep you guys updated in this channel every single day, so subscribe, click the like button, join the 5% project, take a look at our website, link in the video's description. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.